Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar mood turned bearish on Wednesday after the market staged a sharp U-turn from the 63.55 level and plummeted back towards the 62 region. Earlier today, Australia unemployment posted a disappointingly small rise in September after the change in employment for the month was 0.9 instead of the forecast of 25,000 jobs. While full unemployment increased by 13,000, unemployment loss of jobs was 12,000.4. However, the unemployment rate matched market forecast and printing a 3.5%. Looking at the assessment from the numbers, the futures market has a 24 base point lift in rates, which is expected the RBA will be priced in around 25 basis points, that is, in their next meeting. So looking at the technicals, they have buckled due to the rejection and could actually see a further slide, with the target now seen around 62.35 and the base holding at 61.60.65. There's only one takeaway from this pattern that I feel that is positive, is that there is bullish divergence, and we could see any time now a snap back towards that top side of the range. So therefore could see this pullback just as temporary. The euro also backed away from the this year's down channel, as you can see here from the weeklies, and it is a significant pattern, while looking at the technicals have broken down due to the backing away from the top side around 99.35. This was partly on the back of the dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounded from 111.80 to 112.80 and near 20-year highs as recession fears returned on Wednesday after Minneapolis Fed President Neil Kashkari confirmed a continuation in rate hikes till evidence is seen from the core inflation cooling down. But that's a long way away, so therefore could see very much whipsaw price action. But nevertheless, I feel the market still has potential in taking the challenge to the upside if the dollar doesn't sustain above 112. It should be noted that we're moving deeper into dangerous territory as the market now prints a fresh high or peak since June 1990, with the market extremely overbought. I do expect to see some kind of snap, and that is away from 150 and looking down towards the region of somewhere around 145. Let's see if the Bank of Japan notes where the levels are and steps in. The sterling has also backed away from the levels seen around 114, and from there turn the focus back towards the bottom side of its range, somewhere around 111.30 to maybe 110.60, and therefore could see the top side still capped intraday around 113.35.45. Technicals have weakened somewhat. The gold aspect has reached its objective, which is at 1,621. Now, I would like to make a point here that the trend is strengthened, and a break of 1,621 will give us further trajectory to the downside, and we'd have to use the broader picture, which comes in somewhere around 1,515 to 1,565. But it really depends on whether we see a New York close under 1,621. And wrapping up with oil, well, the market has rallied back to the top side of its range, closely around $85.2040. A break here would give further scope, that is, and see another bull run, which views a target at 88.25.55. It's a little bit tricky here because the technicals are negative, and therefore a rejection from 85.2040 would see the move back to 81 and reassess. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the rest of the day.